Hello, what's up? How are you? Thank you for coming. I am so excited to be talking with you guys today. We're going to be talking about credit scores, why it's important to know about your credit score, and why it's important to start building your credit score early on. Now, you might be wondering, why are you dressed so down? I normally kind of dress up and I kind of look a little disheveled. Well, my AC broke, so I am sweating up a storm. But I still want to make this video. I want to be pretty consistent with these. So, please bear with me just for this video. Now, another thing, just to stop here for a second. If I want to ask you to do something for me, could you please smash that like button, subscribe, ring the bell, share this with a friend? I'm really trying to grow this, project of mine. I like doing it, and it would help me out if you just hit that like button. All right, now back to the topic for today. It's gonna be credit scores. What is a credit score? How can you get a credit score up? How can you even just get a credit score in general? That's kind of what we're going to be going over today. I want to start off with a few things. First, the basics of credit. Like, what is it? What does it mean? Why? Who kind of decides that you have credit, and how to work? And we'll work up from that. So first things first. What is credit? Credit is kind of a score that you're given, like a rating ranking system that is given to people to determine how good of a candidate they are to lend to. So financial institutions have a range of numbers that they typically use. They can differ depending on the company and all that, but they typically use about the same range when it comes to this stating what type of score you might have or where along this range of like trustability you fall. At the highest range, you have 850, and it goes down from there. Okay. And in order to even start playing this game and get started in having a credit score, you have to have a credit card. You have to use it wisely. And the higher the number you have, the more trustworthy you are seen as a person to credit from these financial institutions. Early on, it might not seem that important. What do you need credit for? You might even think having credit cards might be a kind of a waste of your time. And I mean, it is dangerous to have credit. And if you're not using it wisely, it can be a huge detriment to your financial stability. But you need to have a credit score. So it's kind of a catch 22. So the best thing you can do is just use your credit and use it wisely. There are three main credit bureaus, and these are the ones that are going to report how you're doing with your credit cards, whether or not you're handling them correctly, and they set your score. So it's going to be Experian, Equifax, and TransUnion. These three companies will have their own kind of little different ways of reporting your credit, but they're follow pretty much the same kind of guidelines. But it's really just important to keep in mind that these three companies are in charge of your credit, and are in charge of your score. That's again TransUnion, Experian, and Equifax. You can visit their websites, and that's actually some point that I'm going to talk on in the video. But just keep in mind that those three companies exist. What does it mean to have good credit? What does it matter in having good credit anyway? Well, it affects what sort of interest rate you get. Okay. So when you're purchasing something that you don't have enough money for, let's say a house, a car, whatever, you need a loan, you need some help, you need some assistance to get that money. And so the banks are going to see your credit score, and they're going to decide whether or not it's a good idea to lend you money. In this, you're going to use your credit score as a way to gauge that, right? They also look at your assets and kind of other financial details about you specifically. But the biggest thing to them is going to be pretty much your credit score and your assets. So if you have a bad credit score and good assets, you might get it, but you're probably going to get a higher interest rate. And an interest rate is how much you're going to have to pay the bank in order to borrow that money. So if you have a higher interest rate, you're going to have to pay more to the bank to borrow that money. A real world example would be having an insanely great credit score, 850, perfect score, whatever, right? And then someone else having a less good score, let's just say a 450, 500, whatever, to be kind of exaggerated. They lock in the same purchase price on the house, they are still going to have to pay more if they have worse credit than if they had great credit. Okay. And that's because of the interest rate. When you have a good credit score, the banks will kind of compete for your business and offer you lower rates because you're a good person to lend to, and they know that their money's kind of safe with you. So they prefer to lend to you, and they will kind of compete with each other for your money. And if you have bad credit, they're just not going to lend to you or give you a really high interest rate. You're going to have to pay a bunch of money. So it's important to have good credit. Like if you don't have good credit, you're gonna have a hard time. And it's that simple. You're gonna have a hard time. So it's better to just get ahead of the curveball and start early in building good credit, getting these good financial habits underway, and just sticking with them over time. All right. So again, three main credit bureaus: Experian, Equifax, and TransUnion. Keep that in mind. It's good to know. Now, what factors affect your credit score? It's like 7 factors, all right? And they're each important, but they're not all equally important, okay? The highest impact ones that we have are our first, payment history. Are you paying your credit on time every single month, or are you missing payments? Once you start missing payments, even if it's just, 2 or 3 months, it already starts having an effect on your credit score that will last for a long time. So one of the most important things that you can do is not miss your payments. At very least, make your minimum payment. That's not, you should be paying a lot more than just your minimum, and you should be using your card a lot less so that your minimum isn't, so that your statement balance isn't high, but you should still, at very least, at minimum, pay your minimum balance so it doesn't negatively affect your credit score. The next big thing that we have is credit card usage. Now, you might be thinking, and I've talked to a lot of people who think this, well, I have a credit card. Isn't it good if I use it a lot? And that way the banks see that I know how to use credit because I'm using it a lot. And actually, no, it's not. You shouldn't be doing that. Actually, you have to prove to the banks that you're very responsible with the money you're given, and that you're not going to use all of it, that you don't need to use all of it, that you will only use a little bit every once in a while. And that little bit is 30%, right? You don't want to go over 30% of your limit, no matter what it is, because then at that point, they're going to start seeing, the banks and the financial institutions are going to say that you are not responsible with lent money, and that you enjoy just kind of buying things willy-nilly on credit. And that's not going to help your credit score. It actually has a very high impact on your credit. So if you are constantly maintaining, 50% balance on your credit card, and you're just paying off the minimum, that's going to hurt your score. You're going to have a low score because the banks are seeing that you're not a person who's responsible for money. You don't pay it all back. The next thing that we want to look at is derogatory marks. Now, this means you've gone to collections. This means that you have been lent money, or something has happened where you've used a service and you didn't pay, and after repeated attempts to pay or collect that money, you haven't paid, and it's gotten sent to a collections agency. This is bad. This is super high impact, and it's called derogatory marks. If you pay that money, you can get these taken off, right? But even just having one derogatory mark, one item in collection, is a huge, it has a huge impact on your credit. You don't want that. So the best thing you can do is just pay off your debts if you can, pay them off. And if you're trying to fix your credit score, you might want to focus more on these items that are in collection to see if you can dispute them, if you can get them taken off, if you can find some way to get these removed from your credit report, because these are super high impact. The next big one, again, was that payment history and credit card usage. So if you're starting from a place where you have derogatory marks, super high usage and all that, I would say focus first on the derogatory marks. Try to get those items that are in collections out and make your minimum payments while you're at this point. And then once you can settle those items that are in collections, move towards the balances that you have on your credit cards and just work towards paying them down. Try to keep them below 30%, because anything above that is going to have a huge impact on your credit score. And you need a good credit if you want to be able to buy things like a house. All right. You're going to spend more money if you don't have good credit. Now, the one that people love to complain about when it doesn't matter. All right. And this is hard inquiries. A hard inquiry is when they run your credit. You're going to live somewhere for rent. They run your credit. You're going to get a loan for your car or house. They're going to run your credit. And it just happens all the time. But I hear people complain about this every day. Don't run my credit. Don't run my credit. It's going to affect my credit score. It's like 2 points. It's barely anything. And it goes away by itself after 2 months. If you're shopping for loans, if you're shopping for a home loan, you're going to be probably going to a few different companies, all right, to find a good rate and shop around. And it will knock your points down by a few. But it's a very temporary thing, and these financial institutions understand that you're shopping for a mortgage, and that you actually, and they can see that you actually didn't end up opening a credit line with that company that you shopped with. It's a normal process. For the love of God, don't think that shopping for a mortgage is a bad decision. It's a great decision. The impact on your credit score is tiny. It's not something to be worried about. Focus on how much credit you're using, on your utilization rate, right? Bring that down to 30%. Work on your items that are in collections. Don't worry about hard inquiries. That's not a big deal. That goes away by itself. All right. The banks know that you're shopping for a loan. They're not going to hold that against you. Don't worry about that. All right. Now, you might be wondering, all right, I know all this stuff matters, but I don't even know where I stand. I have credit cards, but I don't know what's going on with that. Well, here are some resources for you to be able to find out about that, right? I'll see if I can get this on the screen, but here you're going to have Credit Karma. So this is the link to Credit Karma. It's a great free resource. They have some paid options, but it's a free resource that you can go to and get a look at what your credit report looks like. And again, I haven't said this yet, but checking your own credit will not have a negative impact on your credit score. In fact, you're allowed by these institutions to have like one free full credit report per year or per 6 months. I'm not sure, but you can go to Credit Karma and check pretty much daily, and it doesn't have any negative effect. Another one, and this one is more geared towards your budget, but does include some credit options as well, is Mint. Mint is phenomenal. And you can actually also go to each one of the credit bureau's websites individually, all three, Experian, Equifax, and TransUnion, and check your credit with each of the bureaus individually for free. Some of them may ask you to pay, but they on the page when you go, but you have to find the small X and just say, no, I'm not paying. I just want my free look at my score, and they'll do that for you. So just if you're curious, or if you're actually going through the process of a serious purchase, go to the three sites individually so you can really be sure about each of your scores. And what do you do if you don't have credit? Well, they have credit cards for people who are kind of more high risk, people who have just started, never had credit before. If you're a student, they'll be more flexible with student cards, and you can sometimes get a guarantor on some of your lines of credit, although I wouldn't really recommend this unless you have someone you really trust or that trusts you. So you could get a secured credit card. You could have someone add you to their credit card. You could get a student credit card. There's a few different options here, but the biggest thing is just get started and try to get more and more credit cards as you start going forward. Again, do not use them more than you have to, or just to build your credit, right? Try to pay them off completely before the end of the month, just so that you're not using it too much. This is still a very dangerous game. And you have to keep in mind that using credit can affect you negatively, pretty negatively. You can get stuck in credit card debt for years. All right. So just keep it under 30% utilization rate. Try to keep it under that to the point where you can actually pay it off fully by the end of the month. It's going to be very tempting to use it all. So use your brain, right? Freeze your credit card and literally in the freezer, put in a block of ice or something like in the movies. All right. But don't get carried away and think that you have all this money now, because you don't. It's not your money. You're gonna have to be working for the bank. Don't work for the bank. Keep that money and just use whatever is within your comfortable range. And I wanted to thank you for watching this video. If you like it, please subscribe so that you'll be notified whenever I post another video. And I just want to thank you again. Peace.